All right, welcome everyone. My name is Mark. Thank you for jumping on Financial Freedom through Apartment Investing, proud affiliate of the GOB Apartment Network of Apartment Investors. Sorry for the tongue tie. So today we have an esteemed guest, which most people should know, Mr. Beau Beery. And just going to give you a quick bio on Beau. Beau has been in the commercial real estate business in Florida since 1999. He's earned a bachelor's degree in marketing and a master of science degree in real estate from the University of Florida. He also holds, he also holds the prestigious Certified Commercial Investment Member designation, aka CCIM. In 2011, he teamed up with Todd Rainsberger, a successful commercial realtor, to acquire an interest in Coldwell Banker Commercial, MM, Parish Realtors in partnership with the Parish family. There, he was consistently ranked as the #1 multifamily producer in Florida for the Coldwell Banker commercial brand, and amongst the top 5 in the nation every year before starting his own private multifamily brokerage firm in 2021. He is regularly asked to speak at industry conferences and to private companies. He also has an ever-growing YouTube channel called Beau Knows Multifamily. Make sure you guys subscribe to that. Awesome. Where he guides viewers on how to buy more multifamily assets, how to sell them, and how to conduct market analysis. His tours of new listings are very entertaining and widely subscribed. Few fun facts. Prior to starting his own firm, Beau is #1 in Florida for multifamily sales for Coldwell Banker. #2 nationally, multifamily sales for Coldwell Banker Commercial in 2020, and #3 overall combined sales for Coldwell Banker Commercial in 2020. Ladies and gentlemen, Mr. Beau Beery.
Hey! Welcome, sir. Nice intro.
Thank you. So it is a pleasure having you on. I appreciate you again, taking the time out to speak to my platform and educating us.
No problem.
The big thing that I wanted to talk about is broker-investor relations. So just before we kick it off, just tell us a little more about yourself and just speak to us. We're here to listen.
Yeah, cool. So I cover the northern half of Florida. My southern border would be Orlando, Lakeland, Winter Haven area. And then heading north, I cover Ocala, Gainesville, Volusia County, which is Daytona, New Smyrna, Ormond, DeLand, Deltona. And then heading up the coast, St. Augustine, Jacksonville, all the way over to Tallahassee. And then all the little podunk towns in between, I'll cover those as well. Everything except Pensacola, basically. I do conventional and student housing only. I don't do much affordable housing. Anything over 10 units. My trailing 5-year average is about 88 units. So I do a lot of 20, 30 unit stuff. I'll do a lot of 150 stuff. I primarily don't do much over 250, 300 units. That becomes more of an institutional type asset. And those are usually owned by REITs, nationals, and oftentimes they will use publicly traded brokers. My customer is you guys. It's from the small investor to the fairly big size syndication. Whatever company is run by a principal that I can speak to, that's my customer. If there's big giant acquisition teams, dispo teams, board members, you're part of the SEC, that ain't me, right? So, what I speak a lot about is I have found that investors, #1, don't understand how much inventory there is of what they're trying to buy. #2, they underestimate how strong the competition is. #3, they don't know how many sales there are per year of the type of asset they buy. And #4, everyone's usually a part of some, guru, some syndication group or whatever that tries to train them on how to mail the right letter to the seller, how to make the right phone call to the seller, what to say to the seller, how to find quote unquote off market deals, which I'm here to tell you doesn't exist. The best thing I can train any investor to do, whether you're new, intermediate, or you're a giant real estate investment trust, the fact of the matter is the vast majority of all deals are done by brokers. I'm not saying that because I'm a broker. I don't care if you ever do any business with me at all. I'm just telling you the truth that over 90% of all deals over 10 units are done by a broker. And it's not because brokers are big and bad or smart. It's because people who own the assets over 20, 30 units are pretty sophisticated people, especially over 50 units. They aren't off the turnip truck, right? They know that they can hire any broker who has access to hundreds of thousands of investors that can bid up a property, that can get 15 offers in 10 days and get them astonishing prices. So why would any seller ever accept, Mark calling them up at 6 p.m. on a Monday night, and Mark says, "Hey, Mr. Seller, my name is Mark. I own 3 assets over in Jacksonville. I see that you also own, George Street Apartments. Would you be interested in an off-market offer?" Why would he do that? Why would he sell for less than what it's worth? Why would he not have it bidding against each other's? So that's why all sellers, including any of you who are going to go sell, would hire someone like me, because I'm going to come out and do a bang up job on videos, professional photography. I have access to literally hundreds of thousands of investors at the touch of a button. I know every single owner of every single asset over 10 units in the entire state of Florida. I'm on a first name basis with them. They're saved in my cell phone. I know how much they'll pay. I know where their equity comes from. I know how they're funded on the debt side. I know what their pain thresholds are. I know when to call their bluff. I know when they're lying. I know when they have room in their price. When you call me, I get you ridiculous prices. Not just me, but any broker. I'm nothing special, right? Any broker can do that for you. So your whole game has to be befriending brokers. And I'm not talking about stroking brokers or buying them lunch or buying them something for Christmas. That's not at all what I'm saying. All I'm saying is, if you take a guy who does nothing but tries to go directly to a seller and you track his performance over a 5-year period against someone who exclusively just does networking with brokers and transacts in the correct way that builds reputation, this guy will smoke this guy all day long by which would be devastating. I see it on a regular basis for the last 20 years. But there's a certain number of investors that get a thrill of being able to call their friend and say, "Hey, I made a phone call to widow Mary, whose husband died and owns a 36-unit complex, and I called her at just the right moment, and she sold to me for 10% below market." Well, great. During that same period of time that you were looking for that, I can tell you about 15 guys who did 8 transactions while you did that. Right? So the person who tries for the off-market deal may make more profit per deal if they caught someone at the right moment who was stupid enough to not hire a broker. But like I said, if the whole idea is to grow a portfolio, right, then working with brokers is the best way to do it. And the power of owning more units, besides the obvious cash flow and financial freedom, let's just put that component aside. I'm here to tell you from a broker's perspective, the bigger you are, the sexier you are, period. If I got 10 offers and I have the 10 offers on a spreadsheet and I'm presenting that to the seller and we're having a discussion and we're going through all that, and on the notes section of my offer list, I'm able to show the seller, by the way, this guy, Jim Biggs right here, he owns 6 assets that are combined for 450 units. 2 of those assets are in the same market. One of them is a half mile away. That has power, right? So the bigger you get, the more sure of a closer you are. And that's all sellers want. They want to go to contract with someone who's going to close. And so at least 30% of the deals I do, I'm choosing a buyer that oftentimes did not have the highest price or the best terms, but they were going to be a closer, right? Because it's devastating to the broker and more so to the seller to go to contract with someone that I just kind of, I went out on a whim and chose the wrong person. I was just trying to give that guy a chance, even though he was a newbie or only had one asset, and I chose him because he had the highest price. It's devastating if he doesn't close, if he backs out, he retrades, whatever, didn't get financed, didn't get the investors involved, whatever it was. It's tough because now I have to go back to the remaining buyers. And now those buyers will start to think, what's the problem here? What happened? Okay, so now no one's going to be as enthused about buying it as before, unless it's just a really, really sexy property in a great location. So, you know, as you're making offers on deal, some of the things that you can do to make you very powerful, you got to have a bio package, right? I would put together a nice PDF that has a little bit about you, your background. If you don't own a bunch of deals, tell me how your current day job, you know, sort of relates. Maybe you're a financial planner, maybe you're an attorney, whatever it is. Tell me where your equity comes from. Tell me, you know, tell me the lender relationships that you have. Show me a list of your assets with addresses. And the other two most important things you can provide, period, are letters of recommendation from a broker and from a lender. Now, the reason that's important is the following. This is a very, very small world. The multifamily investment world is tiny. Let me give you some stats. Maybe you've heard some of these stats on my previous podcast. In the entire northern half of Florida, all those markets I just listed, right? There's only 1,959 assets over 10 units. That's it. Those 1,959 are owned by only 993 people or companies or REITs in the entire world. There's only 866 assets over 100 units, and those are owned by only 403 people. Now, let's say you're a 100 plus unit buyer. There's only 400 people that own these in the entire world. These are the people from the US, Israel, Russia, India, all these guys. There's only 400 in the world that own every deal over 100 units in the northern half of Florida, one of the greatest states, top 5 states in the country for multifamily, and that's it. It's a small world, right? So if it's a small world, these 403 people use and do business with the same brokers and the same lenders for the most part, right? In that same northern half of Florida, there's only roughly 60 multifamily brokers. And if you look at the 80-20 rule, 20% of those 60 brokers, or 12 brokers, the 12 of us do the majority of the deals. So those same 12 are being used a lot. Those other 48 are doing deals, but the main 12 are doing the most deals. The same way in the lending field, there's certainly way more lenders than there are real estate brokers in the multifamily sector. But my point is that when you get letters of recommendation from every deal you do with every broker and every lender, and you submit that with offers, because it's a small world, when my seller, Sam, sees your package and you have a letter of recommendation from Joe LaFleur over in Orlando, or John over in Jacksonville, or Beau at the Gainesville, they're like, oh, I know Beau. Let me call up Beau. Let me check up on Zach Posey and see what kind of deals he's done. So I call up Beau. Hey, Beau, I see I got this guy Zach who's looking to offer on my property here. I'm using such and such as my listing broker. We wanted to call you, get you on a 3-way call. He listed you as a reference. Tell me how it really was to deal with him, right? That's how this stuff works. And they do the same thing with the lenders. Most of the time, these guys have already used that lender. They've heard of that lender. That lender's been jockeying them for business, whatever it is. And they're going to call the lender. They're going to have a discussion with the lender. Now, lender can't reveal to your personal financials, but they can say, yeah, this guy's definitely got enough assets to buy your asset. He's well-funded. You closed on every transaction we've done with him. He's been quick to provide us paperwork so that we can get him approved. All these different things, right? So that's really, really important. Other things you can do is not just close. I mean, closing on deals is one of the most important things, of course, but it's closing with a reputation. I close with a lot of guys who I never want to close with again, right? They were really difficult to deal with. They badmouthed the property. They were difficult in front of the property managers for the seller. They retraded. They argued every single principle in a contract. They just showed their ass, basically, right? I'm not bringing that deal. I'm not bringing another deal to that guy. There's too many other good buyers out there who's not going to do that. I'm just not going to work with that guy, right? So you got to close with reputation. And one of the biggest things that I see that kill people during transactions is retrading over small things. So I did a video on this on my channel where I talk about retrading is something that can be done in a way in which still keeps your reputation and keeps brokers bringing you deals and keeps sellers bringing you deals. But hardly anybody ever goes that route. What happens is, let's say on a $20 million transaction, when there's a $500,000 issue that comes up during a transaction, whatever it is, a pipe burst, something physically happens, or something was unknown to both the seller and the buyer, $500,000 deal comes up. I never have problems with those, right? If a buyer the buyer is going to need to renegotiate that, and a seller is going to be fine with that because that's a big enough problem that he knows he's not going to be able to sell to anybody until that's solved. It's when I have a $20,000 issue or even up to $100,000 issue on a $20 million deal, that's where people kill the reputation as a buyer. Because what they're doing is they're focusing on that element instead of their IRR, right? As you all know on this call, an IRR takes into account what you put into it, all of your cash flows during the hold, and your sell event, right? So I was talking to Daryl before this, that 5 years from now, when you sell this and make $3 million profit, it doesn't matter about a $100,000 issue on a $20 or $15 million deal. Don't retrade on that. Instead, close on the deal. That'll have a huge effect when that broker sees you be a closer, and that seller who's friends with lots of other sellers who own lots of other properties, who go to parties together, who do hobbies together on the weekend, who talk, who hang out, and they're going to talk about Daryl and Alfredo and Kenneth, who something came up during a transaction and they powered through and they closed. That's what earns you repeat business, because all I'm thinking about is Daryl. Daryl saw the forest through the trees and he closed on the deal. But the IRR is what solves these issues. So what happens almost every time is an $80,000 issue comes up that's not Daryl's fault because he's the buyer. And Daryl says to me, Beau, dude, listen, this thing happened during the transaction. This is the seller's problem. He needs to take care of this. It's not my problem. An $80,000 issue came up, right? And of course, the seller's thinking, Beau, dude, it's a $20 million deal. Why is this Daryl guy coming to me with an $80,000 issue? Just freaking close on it, or I'll go to the next guy, right? That's what always happens. But the problem is that if you take $80,000 and you change $20 million to $20,920,000 on your pro forma, your IRR don't even move. Your cash on cash doesn't even budge, right? And so as long as you're not BSing yourself on a pro forma, plug in the issue in your pro forma and look at cash on cash. Don't look at cap rates. Cap rates are a year zero number. They mean nothing. Cap rates are what the seller, that's the seller's performance. That's not your performance. You need to plug in everything and look at the big picture IRR. And if it's not moving that needle at all, power through and close. And you'll buy way more deals than the next guy. Because I'm telling you, so many of the retrades that happen, it's always over small issues. And when you're the rare guy who closes because you had your mind on the IRR, that separates you from everybody. And because there's only 400 people who own deals over 100 units and 993 that own them over 10 units, it gets narrowed down very, very quickly when you start removing all the schmucks. And there's a lot of schmucks, right? So another stat that's very important that drives home what I'm telling you, 1% of the top 1% of these owners own 11% of the inventory. The top 5% own 27% of every apartment complex. Now, right? Now, on the flip side, 66% of owners own only one property, and 17% own only two properties, right? So these are mostly smaller investors. So if you add those two together, 83% of investors only own 50% of the complexes, which means the other 17% of owners own the other 50%. So the rich get richer, the big get bigger, and they're no different than you. They think forest through the trees. They don't want to retrade. They want to build relationships with the brokers. They want to talk good about properties. They respond to phone calls from brokers and sellers. Their reaction time is super quick. They're just doing easy things consistently over a long period of time. And what happens is the vast majority of people don't. Many of you on this call are thinking, yeah, it kind of seems pretty easy to do the right things, but it doesn't. It's just not. This business is filled with type A hard driving personalities who want to negotiate ad nauseum, who squeeze every morsel of blood out of every deal because they think they owe it to their investors, and they lose sight of the big picture, and they make an ass of themselves consistently, and then they get removed. And so what happens is the broker is never going to call you and say, hey, Angela, the reason you haven't seen something from me in the last 6 months is because, do you remember that deal I brought you, the 24 units over in Jacksonville? Yeah, remember how you did that during the transaction, or you didn't do this? Yeah, I'm not bringing any more deals because you made me look bad. You killed it for the seller, and I don't want to deal with that again, right? No broker's ever going to do that. You have to recognize these things in advance. I've got a bunch of other stuff. I mean, I got a bunch of do's and don'ts I put together we can go over, but let me just open up for questions. That's kind of my high level. My book that I wrote, The Multifamily Investors Who Dominate, that's this little thing right here. I can put up a screen, but this book is all about how I have followed what I call elite investors, which is the top 0.5% of all the investors. I literally went and counted of the 993, how many there were that I've dealt with. I've followed these guys for 20 years, and they do two things exceptionally well. They make their whole game befriending brokers. And number two, they perfect acting as a gentleman or a gentlewoman during the transaction and after the transaction. They're all about their reputation. I'll give you a perfect example. I just had a guy, I took a deal to market. This is one of the very few elite investors. I took a deal to market. This was a hotel to apartment and conversion I was working on about 2 months ago. I brought him 7 offers in a very close period of time. In fact, one of the offers was above what we were looking for as a minimum. And the seller decided, I'm going to keep the deal and I'm going to go ahead and do the full conversion and sell it later. Right? We were trying to sell beforehand. Obviously, I put my neck on the line in front of a bunch of buyers. It made me look bad. I had mud on my face. I had brought a bunch of offers that were at the asking price. Like I said, one of them was more. But this guy was a great elite investor. He knew the value of having tight broker relationships, and sent me a check in the mail a month later. It wasn't for a full commission amount, but it was for a small amount. And I'm not saying you do this with all brokers. I'm saying that's how much they protect their reputation. I had another transaction. I talk about this in the book. Different investor during a transaction. a lot of these elite guys, sometimes they make mistakes. So during a transaction, there was from letter of intent to contract, there was something missed where the seller, the buyer is supposed to pay for title, and the PSA ended up getting signed where the seller had to pay for title. We get down to closing, and it was caught, and the buyer made the seller pay for title, even though in the letter of intent the buyer said buyer pays title. Well, we close in the transaction, seller's pissed, seller calls me up. Listen, title's a small amount of money. It's like 0.007% of a purchase price on average, right? So it was a tiny amount of money, but that really pissed the seller off. They felt like they had been swindled, right? The guy made $10 million, but that one thing pissed him off. He called me up and said he'll never do a deal with that investor again. I was shocked because it's actually one of the few elite investors in Florida. They just had a bad moment. I get a call about a month later from that seller. That buyer later called back that seller. It had been eating him alive for that last month that he had acted in that manner. Called the seller up, said he felt terrible about it. He had a bad moment. Actually sent the seller a check for the title insurance as a reimbursement. That seller called me back and said, Beau, you're not going to believe it. So-and-so just called me back, blah, 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 had the conversation, sent me a check cleared, really liked that guy. He was one of the best buyers I've ever dealt with the exception of that one thing. He made good on it. Wow, what a guy kind of thing, right? So we went from never going to do business with that guy ever again, probably already mouthed off to several of his friends who also own apartment complexes about the guy, and then went to, I would totally do another deal with that guy. And probably has told the story a million times like I'm doing now in front of 25 people about that person, right? So anyway, it's the number one thing I can teach. It's a boring topic, but I'm telling you, your reputation is everything. It's everything because so many people get it wrong. All right, questions so far. I'll shut up for a minute.
Man, Beau, this was truly very informative. You actually answered all my questions ahead of time. So I appreciate you doing that. But let's just unpack a lot of what you said. So for starters, you definitely spoke on reputation and how important it is. Now, let's bring it back a little further. Let's say you're tolling you're just starting out. You just got into a whim of wanting to jump into investing. How should a newbie, so to speak, approach a broker and still uphold that reputation that you're speaking of?
Yeah, great question. You may not like the answer, but it's the truth. And I think I owe you the hard truth. So a brand new person on, let's call it 10 plus units, especially 20 plus units, a brand new person who doesn't own any assets, maybe doesn't have a big balance sheet, you can't make it in this world without teaming up with someone who does. It's just not going to happen. It's too competitive of a world. Maybe in a down market when the world is falling apart and people are dying to sell their assets, which I don't see anytime soon whatsoever, given the amount of inventory we are below on construction. But you can't compete. And the reason is, I'll tell you what, I'll show you. Let's see, what could I show you? What's a deal that's already happened? Give me 1 second. I'm going to show you something really important.
Sure.
Let's see. I don't know if Okay. Let me erase names so that you don't see this stuff. This is an older one. It's not as filled out, but let me share the screen. Boom. All right. All you guys see this?
Yes.
So this is the offer spreadsheet that I present to sellers, and every broker does this in some format. Okay. Usually I have the name of the complex on here. I have the name of the buyer right here on this column. I just erased it to take it away. So when I present offers, I do the price. I'll even break down. I've eliminated some of these columns to make it smaller, but I usually have price per unit right here. due diligence period, closing, whether they're asking for any closing extensions. By the way, never do this. This is a big no-no. Brokers hate that. Sellers hate that. Here's the deposit money, whether it's a financing contingency, whether they've toured personally, principal toward the asset, whether there was another broker involved, and the most important section of all, deals owned or other notes. This is oftentimes called the notes section, right? So the reason a new person can never survive is that I've got all these offers written down, and then in the notes section, I will usually put in here how they're funded, how they're made up. This is not a good example because every one of these guys were fairly involved and had other assets, and so I just talked about the number of deals they had. But if there are other offers who were newer or not as large, I'll have notes in here that says only owns one unit in the market, or is new, or I've not verified their equity sources, whatever it is. And so if you're a seller and you're looking at all this and you've got a couple of offers that are roughly the same and the due diligence periods are pretty close, and you've got deposit structures, like this guy doesn't have as much deposits, but these two do, you start narrowing down. So you go down in levels. Okay, these guys are good on price. I like their due diligence period. Their closing period's okay. Their deposits are fine. They don't have a financing contingency. Okay, what's left? All right. Who's new, who's not, who has the most equity, who has the most assets. And so newbies are never going to be able to survive, because unless it's a total crap asset that is in a horrible location where you're going to get shot at 2 o'clock in the afternoon, if it's remotely a good deal, there's going to be 10 offers and 8 of those people are going to be already versed in the system. I've either done deals with them already, or they own 2 or 3 other complexes or whatever. So the only thing that new people can do is you've got to hook up with a syndication, with a mentor, with a partner, whatever it is. And yes, that may mean that you're going to have to give up 90% of the profits or whatever to learn and build your reputation and build your system. But it's how everyone's done it, right? Now, can you pick up quadruplexes, duplexes, triplexes, rental houses with no money or no previous history and hardly all that? Yeah, sure. It's a far less sophisticated market. The guy who owns 2 8-plexes isn't going to be researching you. You bring him an offer that he thinks is reasonable, he'll probably do it. He'll probably call a couple brokers to verify, probably have a BOV done real quick and then not hire the broker and then call you up. But everyone over 10, 20, 30 units, they want to know that they're going to close. They have enough choices where they want to choose the guy who's going to close. That's the best advice I can give. I can sugarcoat it for you all you want, but you just can't do it until you hook up with someone who's got assets, because any broker who's worth a grain of salt is going to verify all these things. If I don't know you, I'm asking you for you to provide all the things I already told you. Give me your bio. I want either a balance sheet or a lender or financial planner verifying that you have the equity to purchase this asset. I want a list of the assets you own with actual addresses. I'm literally going to look up your addresses and whether or not on the property appraiser you own that. I'm going to look up the entities you have to make sure you're part of those, because my ass is on the line. It's devastating to me if you don't close. That seller, no matter how good I am or whether I was #1 in the world for Coldwell Banker Commercial or not, it don't matter. All that seller cares about is that you close. And if you don't close, I'm the one to blame, right? Unless I gave him guidance otherwise and he chose you anyway, just because you had the highest offer, the only person he's going to blame is me. So I have to research you, and all brokers do it.
Cool. I definitely appreciate the answer. I have 2 questions and a few questions. So the first question is from Ken. He asked, what about brokers and lenders that are out of the current market you are looking into? Ken, if you're still on, can you elaborate on that question, please?
Yeah, because he mentioned like he knows all the brokers. I can say, or say I'm on a team, or I've done business in like North Carolina or Kansas City. And I'm hitting like Tampa as a new market, but I don't have any other broker or lender relationships there. But I've closed 3 deals in Kansas City and I have a lender there. May not be able to lend in Florida, but I've already done like deals with them. Are those letter of recommendations viable, or is that another thing, or is it just what you know in the market?
No, definitely viable. I mean, just because they're out of market, they do have less value, right? Because it's probably not going to be someone that these sellers or the brokers know, but it's certainly providing that kind of material is a good backing, right? But I would certainly, if you don't own assets and markets you're looking at right now, you need to start meeting with brokers and meeting with lenders. Those are the lenders, brokers, and property managers are the most important people you can physically meet with if possible. At minimum, you're doing Zoom calls and phone calls, getting to know them. And, hey, my name is Kenneth Hines. I own so-and-so assets over in North Carolina. I've been in the business 12 years. I'm looking to pick up Florida because it's a good market. It's gotten crazy in North Carolina. I've researched you, Mr. Broker Beau Beery. I've looked at your website, your closings. I followed you on social media. You obviously, so you start complimenting brokers and lenders and property managers and you researching. I mean, you let them know, listen, I like what you do. I like your stats. You seem like you know what you're doing. I'd love to get to know you. You're obviously very productive. Here's a little bit about me. Here's what I've done. Here's what I like to buy. Here's my criteria. And you go through all the criteria. And then, everyone does that, right? I get 10 of those phone calls a day. It's the follow-up where the butter is, right? So what happens is everybody calls those top 20% brokers every 4 to 5 months, checking in for stuff, right? They should be calling 100% of those 60 brokers, the productive ones and the not so productive ones, every 60 days minimum. Really, it should be every 30 days, but every 60 days minimum. And the only way you can do this, and this whole system is in my book, is you need to have a CRM. It's a customer relationship management software. Every salesperson in the world who's worth anything has a CRM. A CRM is where you have all of the contacts in it. Now, I use RealNex, RealNex. Doesn't matter what you use. You want something where you can import properties, comparables, vendors, brokers, lenders. You want all their contact information, pictures of them, social media accounts, articles they've written in the notes, deals they've done, as much information as you could possibly gather in your CRM. And then you're scheduling every 60 days to call these brokers and lenders, by the way. Okay. Lenders have access to tons of deals. They know when people are thinking about either refining or selling. They're connected to these guys. They can give you whisper because they want they want to finance your deal, right? So anyway, the CRM is the only way you're going to be able to do this. You can't communicate with 60 brokers. There's no way that you're going to remember all 60. And so you go in your CRM and you literally space them out to where it's 2 or 3 a day, every day. So when you walk into your computer and you pull up your CRM for today's calendar, there's 3 brokers you need to call, 3 lenders you're going to check in with. And the phone call goes like this. Hey, Beau, my name's Kenneth Hines. I'm out of North Carolina. I'm looking to invest in Florida. I'm checking in with you. Or let's say this is the second or third phone call. Let's say this, because I already talked to you about the intro phone call. Second, third, fourth phone call, you're checking in. Hey, Beau, you working on anything? Anything I can turn offers in on? Have you done any BOVs lately? What's the market looking like? What's sold recently in the market? What should I know about? And then what happens is over 5 calls, 10 calls, 15 calls, you start talking about family. You start talking about what you did on the weekend. You start talking about hobbies. So you can imagine the elite investors I talk about over a 5, 10, 20-year period, every 60 days, calling 60 brokers, 60 lenders, property managers who know when assets are coming for sale, who want you to buy it so they can manage for you. all these people, they're rotating on a regular basis. Every time they have a phone call with someone, they're taking notes and scheduling the next call. You can imagine over a 10-year period, the type of inside calls those guys get before any of you even know about it. So here's how the real world works. Here's the inside shit, guys. All right. So when seller Mark calls me up, Mark's like, hey, Beau, we own the 66 unit Palm Terrace apartments over in Jacksonville. My partners and I are thinking about selling. We'd like you to do a BOV on this. We think it's probably going to come in around, whatever it is, $10 million. Would like to get your input on it. We're pretty sure we're going to list with you. What's your fee structure, blah, 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 right? So we already know each other. We have a phone call. I hang up. What do I do and every broker on the planet does? I call up Zach. Yo, Zach, dude, I just got a call from Mark. You remember that 66 unit deal, Palm Terrace over in Jacksonville? Yeah. Like, he just called me up. The partnership's ready to sell. Listen, he wants me to go full market. You're still going to have to compete, but I'm giving you a heads up. Cool. Boom. Kenneth, yo, just got a call from Mark. Blah, 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 blah. Daryl, just got a call from Mark. Erickson, I just got a call from Mark. You know that deal, Palm Terrace? Yeah. Right. So I'm calling my top 10, 15, 20 guys in the world who I know are going to pay the right number. They're going to give me the right due diligence. They're going to show up to close. They're going to make me look good. I'm calling them 3 weeks before it even comes to market. Right. So here's the benefit. Right. So Daryl, Erickson, Kenneth, and Zach, they are now going to be able to drive by the outside of the property. They're not going to get out of their car and walk around like a freak. They're not going to talk to property managers and leasing agents. They're not going to be able to go inside units, but they're driving by the property. They're seeing how the outside looks and start to think about how they can, they can start bidding out paint. They can start bidding out whether or not it's going to need a new roof or not. They can start thinking about the renovations. They're already talking to their lender about the deal and the size of the deal. They're already talking to their property manager about what they can lease it for post renovations. They're talking to their contractors about renovation costs. So that is why, guys, every time a new listing comes out, 10 days goes by, there's 15 offers. It's because 15 people got a 3-week head start. Because it takes every broker about 2 to 3 weeks to develop the marketing materials, build the drop box with the survey in there and the title work and the floor plans. I take a lot of time to put a lot of effort up front before I even go to market so that I can tell a seller when he goes to contract, I'm going to be able to give you a drop box with everything in it. And in return, you're going to give me no more than 30 days due diligence, right? But this is how it happens, right? I'm giving those guys, I'm giving, a couple dozen guys a heads up before it even comes listing. So there's that. And then secondly, those same guys know their market like the back of their hands. You can't just be covering 5 or 6 states. There's no way you can have the kind of knowledge you need in every market to be a killer. Okay. So on my website, if I show you, let me show you something real quick. So this is my website right here. Let me go to the home screen so you see what it looks like. Why it's taking so long? Boy, that is painful. Anyway, here's what you want to focus on. I don't care what market you're in. If you go to the resources section of my website right here and you click on any market, let's just click on Jacksonville right here. On my website, you will see a whole bunch of buttons here, right? I have provided this to every investor in public here. And I'm the only broker I know that does this, but I do this because I want you to be as educated as possible so that when I bring you a listing, you can bring me offers quickly. If you can master every one of these buttons in the markets you cover, then you can react quickly. I track every single closing over 10 units in the market, and I put it out there publicly. What the class is, whether it's market or student or affordable housing, when it's sold, age, all these metrics. Everything's in here. And then at the very bottom, I give all kinds of metrics overall, right? So you want to track every closing. If you don't have the time, which is extremely time consuming, get them from brokers. You need to know about inventory turnover. You need to know how often, how much inventory trades per year. Only 8% of inventory trades per year on average. It ranges from 5 to 10%. So there's 100 apartment complexes in a market. Somewhere between only 5 and 10 assets will trade. I don't know why everything's going so slow. I'll just stop it. But my point is go to my website, check out those different resources, start assembling that data for your markets, and only concentrate on markets that you have the time ability to master. Okay, you can't be freaking bouncing around to everything that comes across your desk on an email. You'll never become a master at everything. Like I said, there's 15 offers coming in 10 days. If you have to learn a whole market in 10 days and turn in an offer that you can stand by and not ruin your reputation, you're dead. You're dead, and you only get one chance to make a first impression. So the reason I cover those markets in the northern half of Florida is the way I think every investor should do it, which is I have a certain commission amount of money I want to make in my life, right? I have an X number of dollars I want to make. And so I did an audit on every market starting from Orlando going north, and I determined the number of transactions that close on average of the type of complex I think I can close on. So 10 to 200 units, 10 to 150. I look at those number of closings, and based on the market share I thought I could capture, which ranges, I think I can do between 5 and 10% of every deal every year, right? Times the average sale price, times a 1 to 3% or 1 to 4% commission, depending on the size deal, equals X. And so I started with, this is 20 years ago, I started with Gainesville. Okay, Gainesville definitely don't have enough transactions to make the kind of money I want to make. Okay, what happens if I add Ocala? Okay, that don't work, right? So I just kept adding on. Same thing has to happen with you investors, right? You got to know how many sales are happening. So if Leon is working in Daytona Beach and he thinks he can make a living closing on just Daytona Beach assets, he's probably going to be pretty disappointed after this podcast, and he goes out there and surveys his inventory and sees that there's only 50 complexes under 100 units in the entire freaking market, right? And if only 8% of those trade, that's 4 deals a year. People are typically shocked by how few deals there are, because what happens is all of you on this podcast, and most people are guilty. It's nothing against you. You're on social media and you see your friends closing on deals here, and you see closings here. You see, but what's happening is there's a closing in Texas, there's one in Florida, there's one in North Carolina, there's 2 in Daytona. But because all of you are friends with other people who are also multifamily investors, all you see is closings, and you think closings are galore. They're everywhere. It's an extreme minority, right? Of the 1959 assets, at 2,000 assets, only 8% are closing. Only 160 deals a year, over 10 units in the entire northern half of one of the best states in the country. And if you only buy under 100 units, it's half that. It's only 80 or 90 deals, right? And then of those 80 or 90 deals, let's just say 7 deals a month that any of you would potentially buy. Of those 7, how many are owned in locations you would never even consider? How many of them close at a price that you had never even looked at? And most importantly, of anything I can tell you, is how many of those 80 deals were you even shown by a broker, right? That's the big one. The worst thing on earth that any investor can experience is that if I show you a spreadsheet of 80 closings in the northern half of Florida, which one of you may be working in, and you went through that list of 80 and you only even heard about 10 of those during a 12-month period, you're doing everything wrong. You're not doing anything I'm telling you to do on this podcast. You're not calling the brokers. You're not calling the lenders. You're not calling the property managers. Everybody has a certain number of folks they send to in advance You want to get that before market call. You're still going to have to compete in almost every instance, but you're going to have that competitive advantage.
Awesome. James, I know your hand's been up for a minute. Feel free to ask your question.
Yes, thank you very much. Thanks, Beau. This is great stuff.
Yeah, man.
I'm a relatively new guy. I don't have any assets in my portfolio as of yet, but I'm working hard toward it. I full believer of what you said about, in touch with the brokers. My question is, I'm underwriting a lot of properties, trying to find the right deals, and my numbers after analyzing them and underwriting aren't where they need to be with regard to the asking prices. How do you recommend going back to a broker? And I want to keep the contact open. I don't want to just disappear if my numbers don't work. How do you go back? Someone in my position and saying I'm not making the numbers. Like I know.
Really, really solid question, James. And this is if you heard the question, you probably think, it's an okay question, but I'm going to tell you why it's a super important question. So as a multifamily broker who controls the inventory and whether you buy it or not, right? And I'm not saying that as a power, that's not a power statement. This is the way the world works. It's just human motivation, right? The brokers are controlling the inventory. The worst thing I get from investors who are not in the know is they will call me up, and I get this all the time. Beau, like, dude, $10 million? Are you kidding? That's ridiculous. And where'd you get that rent comp from? That makes no sense. I see these 2 sales comps you put in there. That's not even anywhere near. That doesn't compare whatsoever. I just underwrote this. I came up with $8 million. Where are you coming up with $10 million? I'm passing on the deal. It doesn't make any sense. It's the worst thing you can do, right? Because number one, it's going to sell. How many deals on this phone call out of the 27 people that are on here, how many deals do you see come across your desk that you went back and saw that it didn't sell? Everything sells, right? Almost everything sells. So all you're doing is making of yourself by trying to convince the broker that you're right. It doesn't make any sense. The broker's underwriting dozens and dozens of deals a year. He's doing he sees a lot more transactions than you do, and he's tracking every closing. A broker's metrics, the access to data that we have, is second to none. We know what it's going to close for within 97, 98%, certainly within 95%, right? So the number one way you can turn down an asset if the price doesn't work for you is compliment. And then you're saying, it doesn't work for my return. So here's how it would go. This is James speaking. Hey, Beau, it's James. Hey, man, thank you so much for bringing me this deal. I appreciate you keeping me on your list. I'm always going to provide quick feedback to you. That's a beautiful property, by the way. Tell the seller, and by the way, you can even do this by email because then I can forward it to the seller, but phone call is always good as well, and then follow up with an email. By the way, tell the seller, I love those annual flowers he did out in front of the sign. And that sign they redid, gorgeous, really nice touch. And I love how they broke up the colors on that siding. I remember that property from 2 years ago. It was all one color, looked horrible. That property is definitely going to sell. I ran my numbers on, doesn't quite work for my returns, but please keep me on your list. I'm always going to give you quick feedback. That's how you turn down an asset that will keep me bringing it to you right away. And you have to do that quickly. You can't come back 2 weeks later and tell me it didn't work out because I've already got 10 offers. You got to be doing this super quick, but it's compliment. Everyone wants compliments. It's not just brokers. It's not like brokers are egomaniacs, though some of them are. This is just human stuff, guys. This is the way the human brain works. People want to get complimented. They want to, and the sellers, I want to be able to forward your email to the seller. And now that seller who owns 5 other deals, possibly in the same market, saw your compliments about his property and how gentlemanlike you were in declining the asset, that next year when he comes out with the other deal, he may be thinking of you. Or when you turn in an offer on that one, he's like, oh yeah, that James guy, I remember that guy. Yeah, he was class act. There's only 400 people in the whole world that own everything over 100 units and 993 people that own everything over 10 units. These same people you're going to see over and over again. Let me tell you, in the whole northern half of Florida, like I said, I track every single closing. And my team, what they do is every closing that happens, they go in and research it completely. And if there's any new people that buy something in my market, I reach out to them. I can tell you per month, there's only 3 or 4 new people per month that typically enter an entire market. That's it, right? It's mostly the same guys trading over and over again. Very rare does the guy in California who owns 10,000 units buy his first property in Florida. Now it happens, like I said, it's 3 to 4 times a month. There's a brand new person that comes in, but it's the same people over and over again. I'm telling you, you're going to face these guys, especially if you're going to be in this business for the next 20 years. You're going to face someone else again, and your reputation it just spreads all over the place. By the way, on your underwriting, it's totally normal. So tell me, just out of curiosity, how many deals have you underwritten in, let's just say, the last 90 days? Would you say?
Me, I'd say about 20.
Yeah. So, 20 deals, you have to understand, like, you've got to kiss 60, 80, 100 frogs to buy a deal. The guys who are doing 10, 12 transactions a year, they're seeing hundreds of deals, right? I mean, so what you're experiencing, I'm telling you, is totally normal. Like, most deals are not going to work for your pro forma. It's going to work for someone. It just doesn't work for yours. But you have to understand, the price doesn't work for you. The price does work. That price is market value because someone's going to buy it. Also, on your underwriting, I would just say this, and I talked about this a little bit in the very beginning, but if you haven't been, you really need to concentrate on the cash on cash and IRR. It's the big thing. And I think IRR is more important than cash on cash, because cash on cash is obviously the performance during the hold. But for instance, you could buy something that's in the pathway of development that 5 years from now is going to have an explosion. The cash on cash could have been, a measly 5-6% during the hold, but you could have a tremendous cash event in 5 years, in which case the IRR now becomes 18-19%. Is that okay? Yeah. But a lot of people pass it up because it was a 4.2 cap when they bought it, right? So I would really steer from cap rate. It's a horrible metric. I hate it. The only time a cap rate is worth is if it's a totally either brand new construction or completely stabilized property that is at optimum rents, managed by an absolute boss.
Awesome.
Great stuff. Thank you very much, man.
But also at the same time, do not fall into the trap of making your IRR work so that you can buy it. So what happens is, I talked about how everyone sees all the social media posts, and what happens is you start getting FOMO, right? Fear of missing out. And you want to buy something so bad because all you see on social media and you hear from your friends and you come to these podcasts is buying. But I'm just telling you, those guys are not buying all that many deals other than the elite, right? Because there's just not that many happening. But what happens is a lot of new to intermediate folks, they start bending their own rules to be one of the guys who gets to say they bought something. So truly, do your IRR correctly, but choose IRR over cap rates and even cash on cash, depending on what the long-term sale event looks like.
Good stuff.
Awesome.
Thank you.
Missy Lou, go right ahead with the question.
Yeah, thank you, Mark. Thank you, Bill. I have a question about when you're talking about when working with brokers, when you team up with, we meaning people like me who are just starting out, when you team up with experienced high net worth partners. Do you mean by having them on the advisor team when talking to brokers and banks, or do you mean like forming an LLC with them as partners?
No, I would actually partner with them. So when you make the initial phone call to the broker who has a property listed, is it Missy or Misi?
Yeah, Missy.
Misi. Okay.
Second one is correct. Yeah.
Got it. Okay. So when you're calling up the broker, you're like, hey, Beau, my name is Misi Lou. I'm an investor out of Clearwater. I see your asset in Jacksonville for 32 units. My partners and I, okay, are considering this asset. We like it a lot. Could you send me some information? Sure. So I send you some information. You underwrite it. You're getting ready to turn in an offer. You're going to call me up again and say, hey, getting ready to turn in an offer on this deal. First of all, at that point, when getting ready to turn in an offer, I would try to get some information from me. Hey, how do offers look? You know, where do I need to be to win this? Can you give me some information? Always try to extract information from brokers, right? They want to be able to help you as much as they can. But when you're talking to them, you're saying, listen, hey, I know we don't know each other very well. My partners are Pat Gage, Angela White, Leon Turbert, whatever it is. You know, we collectively, we have 300 units in Texas and South Carolina. We've been doing this collectively for 32 years. I'm the acquisitions person. I'm the one who goes out and finds the assets. Angela is our main equity source. Leon has the management and construction experience. We look forward to working with you. We're thinking about coming in at this price. What do you know, here's some of our assumptions, and you turn it in, right? Never at any point do you call up and say, I'm just Misi Lou, and I have nobody else, and I'm turning in an offer. But it has to be real. I mean, you do have to partner up with these guys, because if you turn in an offer and it's your LLC is just you or whatever, like, I'm going to need more information, because again, my ass is on the line. So you really do need to create entities or partnerships with these people and do deals with these people. Get comfortable with them, whatever you got to do. It's just going to be really hard to compete over 20 units if you don't.
Can I ask a follow-up question? Do we have time? Okay.
Go ahead.
So basically, when I'm just looking at the deal, that person, because what if you're working, you know, working with multiple advisors, they may or may not be on the deal right away yet. So you're just saying, this is my team, and so that's just an advisor that you have. But once we looked at the deal together, we looked at underwriting, and we're very interested. At that point, maybe we haven't formed the LLC yet, but once the offer is accepted, we start the LLC paperwork for that.
Yeah,
Is that okay? Yeah.
That's fine. Yeah, that's fine. I mean, to me, let me just tell you, if you have complete confidence in these people, sure. I'm just telling you, I've been in this business for 20 years. Let me tell you what happens. Okay.
Okay.
Misi Lou calls up Angela White and Leon Tubert, and they're like, yo, got this deal over in Jacksonville. I've been underwriting it. I told you about it a couple of weeks ago. It's right. It's, you know, let's go after this thing. All right. So how much you in for? How much you in for? Okay. Let's create the LLC. What are we going to name the LLC? And as soon as you're like, how much you in for? Angela's like, well, you know, the car just broke down, or my mom, she's really sick, or whatever the is. That happens over and over again, right? I'll have to bleep out that F word when I record it. But this happens all the time. And so, I mean, unless this is, you know, just your bestest friend who has been solid rock for you forever and ever and ever, my advice is find your people, create the LLC now, even just a little bit of joint money into an account, get everybody to agree on property managers you're going to use, get everybody to agree on the 3 lenders you're going to call, get everybody to agree on the contractor you're going to work with. You need to get this done in advance, because I'm telling you, it's a stressful environment. You've only got 10 to 14 days to turn in an offer that you're going to stand by. And if you have to waste 4 days trying to convince Angela why this is still a good deal, even though she's been talking shit the whole time about how she can't wait to do a deal with you, it's a bad environment.
Okay.
Especially, you know, newer folks. It's just, I get that done in advance. I see it too much.
Okay, thank you.
Mhm.
A quick question for you, Bo, before I know I have two other questions in the queue. So just to go back on what you were explaining to James, I know time is very important in this business. So why is response time important? And
Woo.
when it comes to brokers sending you deals and so forth, how long should it take before we respond to the brokers and etc.?
Yeah. So a plug. Let me do a plug. This is what the book looks like, by the way. If you guys haven't seen it, this is
Great.
on Amazon. It's on hardcover. It's on audio. If you guys are audio guys, it's on Kindle. Multifamily Investors Who Dominate. Just plug it up on Amazon. So in this chapter, I'm telling you, this thing is the Bible. It's going to tell you how to grow a big portfolio. I don't make a lot of money on it, so don't think I'm making a bunch of money when you buy this thing. But in this book, I actually give a chart, just that chart right there, that actually gives the best response times. These are response times of elite investors, not average investors. But when people do this stuff right here that I'm about to read to you, that turns a broker on. That's what we want. That turns a seller on. That's what we want to see. That shows you mean business. So I'll go over a few of these. As you guys gain units, you're going to start getting calls from brokers. You're going to get calls from brokers that want to sell your property. You're going to get calls from brokers who want to introduce themselves. Whatever the case may be, all investors get more calls than they probably want to from brokers because we're always trying to jockey you for business, right? Most people don't call us back. When you're the investor who calls us back, you're on our radar. We think of you, not just because we're brokers, but because this is typical human motivation stuff. So the first two things I talk about is when you get a call from a broker who's just like calling up Alicia and I'm like, hey, Alicia, this is Beau Beery. I'm leaving you a message. Hey, Alicia, this is Beau Beery. I noticed you just bought 12 units over on Main Street over in Daytona Beach. I'm a multifamily broker in the area. I'd love to introduce myself. If you're looking to buy more units, I want to have a conversation with you, right? Click, right? What happens is Alicia never calls me back. But if Alicia calls me back within 48 hours and says, hey, Beau, I got your phone call. I'd love to talk to you. Like we're having a dialogue, right? Like you're giving me the time of day. Usually the bigger the investor is, the less he calls you back unless you're one of the 20 percenters, right? So every broker who calls you, just befriend them. You're trying to create the biggest funnel you possibly can. The more deals being brought to you by the most brokers, the bigger the probability is you're going to be able to buy something. Everyone can underwrite an asset. I can teach my 16-year-old how to underwrite a $20 million complex. It ain't hard, right? It ain't rocket science. It's income minus expenses, for God's sakes, and you throw in some debt. Anyone can teach someone how to pick property managers. You can eventually learn the contractor stuff and what kitchens and bathrooms look good. That's the easy. The hardest part in the world about this business is not finding assets. It's becoming the investor that in all the deals come to you. That's what this thing's all about, right? And so the more brokers that you can have interactions with, they're going to be thinking of you. And the more you connect with them every 60 days, every 30 days, you're only as good as your latest phone call, right? So for instance, if you're only calling me every 6 months, and I'm at a party and I could meet a brand new investor. I'm at a fire, I'm around the fire, I'm having a beer. I meet Alicia, we're hitting it off. We know the same people. Oh, you're an investor, that's cool. Hey, by the way, I got this 12 unit deal coming up over in DeLand. I'll send it to you tomorrow, right? But if Pat had been doing what he was supposed to and was calling me regular, he might have been also fresh in my mind, but Pat hadn't called me in 6 months. So now this brand new person who I just hit it off with, Alicia, I send her the deal. So that's why the cadence in your CRM is super important. I'll keep going. You were offered a listing, right? And you have interest. So you were offered a new listing, whether or not you have interest or not, let me know within 18 hours. So I send you a deal or I call you or I email you a new listing. You need to tell me whether you're interested or not in 18 hours. You don't have to turn in an offer in 18 hours. Just tell me, yeah, I got your email. Yeah, I got your call. I like it. I don't like it. thanks, whatever, something in 18 hours. Otherwise, when you consistently don't respond or you respond a week later, you're just not a real player to me. And there's too many other real players. Okay, we got on a phone call together. We discussed the new listing. You like it. You understand it. You're going to probably take a run at it. I've asked you to sign a confidentiality agreement. We hang up the phone. I'm going to email it to you. Get that back to me in 8 hours. I can't tell you how many times I had a good conversation with the buyer. They're like, yeah, this is legit. Send me the CA. I send them a CA. They send it back to me like 6 days later. I'm like, dude, what? Or the worst, and I get this all the time, it blows my mind. People will turn in letter of intents, haven't even signed the CA, haven't looked at a single financial. These are just idiots that like, they come up with like, they just did their own metrics. They just like, oh, it's $5,000 a year per unit for expenses. And I figure these are the rents. I'm like, dude, I have the real financials. And they'll turn in offers. Within 5 calendar days, try to get me a letter of intent. Now, I'm telling you, these are elite investors. This ain't Joe Schmo. Elite investors are getting me something in a week because I gave them a 3-week head start and they know the market like the back of their hand. And yes, it may not be fair. You may not have been the guy who got called, but when you become the guy to get called, it's fair, right? All right. So the seller has gotten your LOI. We've chosen you as the buyer. We marked up your LOI a little bit. Get that back within 1 business day. Again, I can't tell how many times during letter of intent negotiations or PSA negotiations, the seller sends back the red line to the buyer and he takes like 4 days to get back red lines. You need to be choosing attorneys who are deal makers and not deal breakers. Don't choose attorneys who redline stuff ad nauseum to try to prove their worth. When you're choosing and interviewing attorneys, find the guys that are going to react quickly. They're going to take you seriously and jump on your stuff. All right. Let's see here. Touring the asset. You guys, I'm telling you, you know, I don't care if you're in Texas and looking at a deal in Florida. You're going to be at a disadvantage if you personally are not flying down to physically walk that asset with the broker. You may make it past the first call for offers round, but to get to a best and final, you ain't going to make it until you come visit it. I would come visit these assets as soon as possible. Is when you can get in front of the broker and the seller if they come on the tour, very powerful. Especially nowadays when everyone's doing cross-state, deals and trying to find stuff. A lot of these guys just turn in, a letter of intents, and physically being at a property and driving the market and the submarket, it oftentimes completely changes your view of an asset. And every human being and every broker and every seller knows that. And they know that your offer is kind of a quasi offer because you haven't physically been there, and they're scared to go to contract with you because then when you're going to come here during due diligence and you're going to walk in, you'll be like, oh, wow, like I totally did not know about that complex across the street. You just drove it on Google Earth, but there's a whole different feel, and all of you know that when you physically come there. All right, last couple I have on here, due diligence period. You can't be doing more than 30 calendar days, and the less, the better. Unless it's a portfolio. If you have a portfolio, like let's say you're looking at 4 assets in the same market, you can go up to 45 days. Or if it's, say, 4 assets in 4 different markets, like 3 hours apart, you could probably get away with like a 60-day due diligence period. But most deals are 30 days, and you're closing 30 days later. You can go as much as a 45-day close after due diligence. Because most of the time, as long as you have a big enough deposit down, most sellers don't care. Let's also talk about deposit money. I don't know what the deal is, but so many buyers, it's like we talked about with Daryl before this all started. Every buyer is always trying to turn in an offer that's just enough to win, and they keep losing because instead of trying to hit a home run and really kill it with the price, they always try to pay just enough. Same thing with deposits. I see people turning these little deposits. Like someone came up with this 1% rule or 5% rule. It's dumb. Okay. If you're looking at a $5 million deal at closing, you're going to have to put down $1.5 million already. You're going to have to come up with 30%. So why wouldn't you come up with, a much larger, why wouldn't you come up with a $300,000 deposit? Like blow someone's mind. You're already going to have to come up with $1.5 million 60 days from now. I want you to walk in there and I want you to just slam it down, like slam down 300 grand, because everybody else in a $5 million deal is going to be at like 50 grand, right? And it's stupid. I don't get it. 300 grand, even though it's non-refundable, 300 grand shows you're a player. It shows you're liquid. It shows you've got money in the bank. It shows you're not going to a bunch of other investors who you're going to have to sell the project to do the deal with you, right? We're all looking out for these guys who have hardly any money and they're going to team up with someone else. You need to already be teamed up and have money to slam down, because the seller just wants to know you're not going to walk away. After that 30 days, when he sees 300 grand down, he knows you ain't walking away. Now, you can do a 150 and a 150. That's fine. But make that combined deposit substantial. Do not do separate subject. Don't do closing extensions. We talked about this in the very beginning before a lot of you came on. It's a pet peeve. Sellers hate it. All of you would hate it if you saw it. And it's just, it's almost like buyers are trying to trick a seller. So you got a 30-day due diligence, a 30-day close, and then you put in one 30-day extension for an extra 50 grand. Don't do it. It's a 60-day close. That's what it is. That's all you're doing. And the seller, you have to understand, once you're hard on your deposits, they are now planning for their closing. They're planning where to place their money, how to do their 1031. They're setting up all their players. They're talking to their property managers, their leasing agents. And then 20 days into that supposed 30-day close, you now turn in a letter and says, we're exercising our next 30-day closing. It's crappy. Nobody wants that. And when you submit it, I'm telling you, there's going to be 8 other guys who didn't do that, and they're going to win.
Thank you for responding to that. Kayla, feel free to ask your question.
Hey, Beau.
Hey.
For all that useful information. I guess I'm piggybacking off of, it's Missy. I just want to make sure I'm pronouncing it right. Okay. I'm piggybacking off of Missy's previous questions. So if, for instance, for whatever reason, I'm not able to find a partner to, a partner to partner up with, and I decided to run a syndication, are you, as a, a formidable broker, having brokered a lot of deals, would you still look at a syndication with people who are novices in the field and can put up the money? Would you still consider them for a deal, or is it much more?
You're talking about you creating a syndication that's made up of other investors who also don't have a whole lot of money and not a lot of experience?
Yes.
I mean, it's an easy answer. I mean, put your seller hat on, okay? Mm-hmm. So Kayla owns 5 assets. You've called up Beau to sell your 85 unit deal down in Ocala. Beau in 2 weeks has brought you 12 offers. I put it on a spreadsheet. We're going over the offers. Hey, Beau, tell me about Zach. Yeah, okay, so Zach owns this and this. He turned in this offer. His due diligence period. One of those deals is 2 miles down the road. Pat is this. Blah, 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 blah. Tell me about Kayla, Beau. Okay, well, Kayla, she's never done a deal before. She's syndicating this. None of the syndicators have put in their money yet. She wasn't able to provide me, any kind of proof of funds. She wasn't able to provide me the lender who backed up the fact that she's able to buy this 85 unit deal. You see how that goes? Like, it just doesn't work ever. The only thing that could possibly work is if you overpaid enough and provided terms and price that were so ridiculous that it was worth taking a chance on you, that if you backed out, we could still go back to the other person, right? So the people, for instance, let's say I have 5 offers and all 5 people own assets and have liquidity. Still the person who owns the smallest number of units or who has the least experience is still not going to get closed. And the only way they can combat it is if they bring a huge price in terms. It's got to be enough where you would pass it up. So you're just, all I'm asking Kayla and all of you is you just kind of continue to put your seller hat on, right? Just think, if you had that many assets, if you were selling that asset, what would be appealing to you? And it's not what you want to hear, but on anything where a broker's involved, the only way you're going to get away with this is if you have a really good verbal game and you contacted a seller directly at the moment in their lives where, for whatever reason, they didn't feel like hiring, didn't want to go through the process, whatever misconceptions they had. Usually the only time that happens is if there's like a widow, right? It's, the husband or the wife died who actually did real estate, and now someone inherited it who they just want to get rid of this thing and get the money. Like, and they have some, they hate brokers, or whatever the case may be. And Kayla called them at the right moment in their time where 3 tenants just moved out. They're pissed off. Kayla calls up at the right moment and they're like, yeah, make me an offer. All right, that offer looks good. Let's do a deal. I'm just telling you, that's super rare.
No, I get it. It makes sense.
Or there could be brokers who, like I said, there's some commercial real estate brokers who do office and retail and industrial, and they occasionally do a multifamily deal. And so, they're used to not, they don't go to the depths at which full-on multifamily brokers go to. And you have the right verbal game. They may not research and ask you all the questions and ask for your proof of funds and your letters from debt and all that stuff. And you might be able to do a deal. But, we're talking about long-term. You're a young lady. You probably looks like you're in your 20s. You've got, 40s, 50 years ahead of you of investing. You might as well get this thing right on the front end, because it only takes 4 or 5 times in a row where you couldn't put together the syndication or you couldn't close on the deal, and that word spreads and you're toast in that market. But if you do it right the first time and the second time, you're on everybody's radar because you've built that momentum ball. The guys who keep growing crazy, they've got that momentum ball. And every win they do, every deal they close, they're advertising on social media. So now you're seeing all these guys on social media. I use social media because that's the main marketing means now. All these syndications now, and all these even REITs and national companies, all these publicly traded companies, they are now marketing themselves like crazy on social media because they want the brokers to see it. They want their investors to see it. They want their property managers that work for them to see it. They want the world to see how active they are, because they know that momentum ball is what keeps bringing the deals back to them. They're in the limelight. Listen, it's hard to get started, but everyone dies in that 2 to 3 year startup period because they just can't get any traction. But as soon as you hook up with the right people, you get a couple of those little deals done. Those brokers you did deals with, they spread the word, the sellers spread the word. And all of a sudden, 2 years later, you get your first call. Hey, Caleb, by the way, so-and-so just called me up. Deal's coming out in 3 weeks. That's what you're looking for.
Okay, gotcha. Thank you.
And the floor is yours, sir.
This great information, Beau. It's sort of a tangent to that question that Kel just asked. What if I'm a syndication team? It's me, James, Darryl Murphy, Aaron, and got the great Jim Biggs in our corner. I have Joey Peterson lined up as my lender. We've done syndicated deals in other markets. Like we've done 5 or 6 deals where we raised $1 million plus. Now we're in your market. We see a good property and we put an offer in. Are you going to ask us for proof of funds from a proven syndication team, or is that just something for newbies? Or how do you, if I have not done a deal for you, if I'm a syndicator, how do I get over that?
Yeah, no, when you already have a number of assets, I don't need a proof of funds. I just need the addresses and the complexes, and then I'm going to research to make sure that you actually own these assets, right? That you have that in your portfolio. Most people who own several assets have created a website now. If you don't have one and you own assets, you should go ahead and do that, because what happens is when I turn in your offer, it's always powerful for me to be able to provide the link to your website that shows your bios, the list of assets that you have, how you're made up, your connections with other, lenders and so forth. That's great. I understand you have to have a certain number of assets in order to make that worthy, but if you've already got a few, it's nice to be able to do that. But here's the hierarchy, right? When you're competing against other offers, here's the greatest hierarchy. Top, I've already done a deal with you. Ain't nothing beating that, right? Because I am personally able to speak to my seller. Hey, Mr. Seller Misi, I did a deal with Kenneth 2 months ago. That dude is a closer. He didn't retrade. He was great to work with. He was cordial, closed 3 days ahead of time. Financing showed up. There's nothing greater than I've done a deal with you. Okay. Next is number of assets you own. Next is if you don't own a bunch of assets, is liquidity. How rich you are, right? Because if you don't have assets and I've never done a deal with you, the only thing you can compensate with is how much money you got, right? But to have assets in other markets gets you in the door, but the guy who owns more assets than you or the same number of assets you in the market and is comparable in your offer, you're getting beat.
So this may be off topic right now, but another question I do have for you is, why is empathy important in deal making?
Why is what?
Empathy.
Oh, yeah. So the greatest negotiators that exist are the people who see the other side, showing empathy, right? This business, as I described before, is so full of type A, hard driving, usually fairly wealthy folks, the ones who own the assets. They're doing well in their lives. They've got between 1 and 5 assets on average. And they probably a lot of these also work for a living and make good money. No one has to sell an asset to survive. No one usually has to buy an asset to survive, right? So they're all well-to-do. And so sometimes what happens is because people are hard driving type A personalities in this business, they lose sight of basically acting in a gentlemanlike manner, and they're only looking out for their own interest. They want to win, right? They don't want to win. They want to win the negotiation. They want to win the deal at all costs. Most people see this as an adversarial type deal. But the best investors I see are always thinking about the seller on the other side, right? So during negotiations, when your letter of intent or contract gets marked up, don't look at the markup and say, that's ridiculous, that's stupid. Think about, why did he make that marking? What about that clause makes him feel uncomfortable? Okay, let me put my seller hat on. Okay, well, he did this because such and such, right? And you talk to your attorney. Now, attorneys by nature are going to try to protect you at all costs. They're going to create the 1% probability of something happening, and they're going to scare the shit out of you. Beau, I'm telling you, this could happen. I've never seen it in my career, or I've seen it 5 times in my career, but it could happen, right? You need to put your empathy hat on, and you need to think about what's the probability of something happening, why did the seller do this, and try to negotiate in that manner. And by the way, I love doing written stuff. So I would write back to the broker, hey, I see this clause in here. My guess is the seller is coming up with this because he's trying to protect this and this, right? That makes sense to me. How about we do this, right? Instead of, redlining back or going back to the broker and saying, or going back to the seller or the seller's attorney, whatever it is, and saying, this is ridiculous. Like never, and this is what I get all the time. Never in the history of the world, of all the deals I've ever bought, have I ever seen a clause like that. It's like a standard clause. Like you're trying to make the seller feel like they're a total idiot. I've never seen this before in my entire life, right? Don't do that. Use empathy during due diligence. Like when you're getting ready to set up inspections, don't call up the seller or the broker and say, hey, we're doing inspections next week on Tuesday. I'm bringing three inspection crews. I need 3 of their staff members. We're going to look at all 150 units. It's going to take 2 days. And we're showing up at 8 a.m., right? So that's one way to do inspections. Or you could do the other saying, you could do a different thing, and you could think about the seller, okay? Does the seller want to turn over 3 of their 5 staff members for 2 days, walking tons and tons of units, and at whatever time you choose? Or you could call up and say, hey, Beau, or you could type it out. I always like type it, because if you type it out correctly and you're doing it nicely, I can forward it to the seller, and that builds your reputation with them. But you're saying, hey, Beau, so we have the ability to have 3 crews show up on Tuesday next week. We know the seller is very busy. We know they only got 5 staff members. We want to protect their interests. We don't want to hiccup their business too much. We have the ability to do 3 different teams going at the same time so that we can get out of your hair in 1 or 2 days. But if you could run by that by the seller, tell me what they're able to provide. We still need to look at all 150 units, but we've got a computerized system that checks off everything. We'll walk in and out of every unit within 5 minutes, sometimes 3 minutes. But could you find out from them what's most convenient time, what day works best for them? Could they do 3 staff members? If not, how many? Whole different tone, right? You've said it's feel, felt, found. Hey, Mr. Seller, I know how you feel. I would feel the same way. This is what I've found out, or how, I know how it works for you. I want to accommodate you. Whole different tone, and it builds support, right? So that if something comes up in a due diligence period, it's a much easier conversation. But if you barked orders to them, anyway, empathy goes a long way. It's just constantly putting on your seller hat, all in every facet, with the broker, with the property manager, when you're walking the property, right? And you see something that's messed up on a parking lot or in the whatever, think of the seller. Like you're going to compliment other stuff. Man, the flowers out front are great. Or man, I love that paint color. I love how you did I love the paver that you chose in the pool. Don't point out the screwed up tree or the messed up parking lot, right? It's a little easy stuff, but people just have diarrhea of the mouth, man. It's crazy.
Thank you, Beau.
Yo,
I want to ask you a question here. I know you're pretty, from listening to you, it sounds like the buyer, the buyer has to be right, come correct. Otherwise, he goes on the bottom of the totem pole. Okay. But how do you handle that ignorant seller who acts like an ignorant buyer? Do you also put that ignorant seller at the bottom of the totem pole?
Absolutely. Absolutely. Because that affects my reputation. I'll give you a perfect example. I did a deal. This would have been 2018 or 2019. I was selling a 132 unit deal for a guy over in Gainesville. And I had heard he was kind of a bull in a china shop, meaning he just, hard charger and just barked a lot of orders, and he did his things his own way. And so I was a little suspect, but it was a nice complex. I knew buyers for it already. I knew I could sell it. Frankly, mistakenly on my side, I knew he was a little bit suspect, but I saw a 6-figure check for myself, right? So I chose him. I did the deal, and the whole deal was really, really difficult, right? I never put anybody in their place, even a person like that who's acting like an ass. I'm never going to say, you were a prick. I'm never going to work with you again. I don't do those things. I try to cordially tell them where I think things are going wrong. But after that transaction, I don't do any business with them ever again. Even when they call me to sell something, I just make up some other excuse. And they actually have done that subsequently a couple of times with other smaller assets, and just said, hey, I'm concentrating on different kind of deals. Or I'm doing stuff in different markets. And they got it. I think they understood. And of course, I never bring them deals to buy. That would be awful on my side, right? So yeah, I mean, listen, sellers are buyers and buyers are sellers. So the people who are pricks who are buyers are going to be the pricks when they're sellers, just the way it is. But they have a very short-lived career from what I've seen. They don't last very long because it's a small world. I mean, unless they're just, flush with previous generations of cash that allow them to continue to buy for whatever reason, they usually don't last very long.
Awesome. So I know we're slightly over the hour, so but I just have I actually just implemented this into my routine. So I call it financial freedom speed round. So I'm just going to ask you a few questions, and feel free to just let us know. So, what is your favorite book of all times?
Probably the one that's had the best impact on me is a book called Deep Work. So Deep Work is all about basically getting rid of all the noise in the world and doing the one thing that you are best at during a time range during the day. So for me, from 9 to 11 a.m., that's my deep work time. And I do the most important thing in my business, which is talking to existing customers. I call up what I call my rank A customers. The same way I teach you to call brokers, I call my 3 to 4 people a day that are different people every day. And I interchange them every 60 days. I'm calling them every 60 days. And from 9 to 11 in this room, my wife knows not, and my kids know not to come through that door unless someone's on fire or being murdered. From 9 to 11. I turn off all social media. I turn off the buzzer on my computer. I put my phone on silent so that it's not ringing phone calls. I save every human being in my phone so that if I do get a phone call, I only answer the ones I know that are important. And all I'm doing is getting my phone calls in the morning, right? And Deep Work talks about how unbelievably productive and how to, the actual process of being able to do that and do it consistently. I'm telling you right now, if you guys have never done this, start off with 30 minutes, but just in 30 minutes in one day, have conversations with the brokers or research a market or look up stats and turn off everything else in your life. Don't let anybody come see you, get in a dark room, go to a library, whatever it is that's your place, okay? Do it for 30 minutes, 5 days a week. You'd be blown away how much you can accomplish. But what happens is as soon as we come in the office, what do? We check our emails, we take our social media accounts, we return our voicemails. And what happens is once you return all those, the ones you just returned just buzzed you back again. And so it's this constant loop that can happen all day long easily. Okay. But I don't do that from 9 to 11. Then I have lunch. Then I come back. Then I return all the millions of phone calls and emails and all the other crap. But the problem is that all those things are usually way less important. If you just worked in your business for 30 minutes or an hour or 2 hours, you'll kill it.
Awesome. What is the first deal that you've ever closed and how did it make you feel?
Actually did a 48 unit deal in Ocala. I remember thinking I have arrived. I got a big old head. It was a nice sizable commission. And I felt like all the work I had put in had finally happened. Cause it's in the brokerage world, it's 6 to 18 months to get to a point where you get a call, right? Cause you're just building your name, you're building your practice. Same thing as an investor. You're building your name, you're building your practice. You're doing nothing but making phone calls. Then you finally get the phone call and you take something from start to finish. It's super rewarding. It was really, really gratifying. And what happens is it gives you the ability to advertise that, right? So when you guys do your first deal or you do your second deal or any deal, you got to advertise your wins to the world. One of the things I learned from, I think it was like Trump or something, or some book he wrote, no one's going to celebrate your wins except you. And it's not bragging. It's notifying the world that you're a player in a manner in which is not cocky and so forth. Now that ain't Trump, but it's doing it in a way that's not cocky. It's notification.
Awesome. Biggest mistake ever made in your real estate career, and how did it help you get better?
Honestly, it's that Daryl story, man. Like, I've chosen wrong people, particularly early on in my career, like 20 years ago. The one I told you about was actually just a few years ago, but probably my biggest mistakes was early on being a young broker. You take on anything, right? And investors do the same thing. Oftentimes you guys will take on crappy deals just to get that first one done, and you pay for it forever. Same thing. I was working with the wrong people just to close anything. And what happens is the wrong people influence your reputation. And so when you continue to surround yourself with the wrong folks, just as we as parents talk to our kids, that stuff rubs off on you. Even if you did everything right as the broker or the investor, people associate you with those people. And when I was working with the wrong sellers and the wrong buyers, they were turning in lowball offers or retrading or doing all the wrong things. If you continue to do that with folks, that word spreads and no one wants to look at your offer. So I learned that luckily early on.
What sets you apart from all the other brokers out there?
I'm a statistician, man. That's my thing. Like, I'm known for my data. When people ask me questions like, Beau, hey, Beau, how's the market? Most brokers answer like, oh, the market's hot. It's doing well. Transactions are up. Pricing is crazy, blah, blah, blah. When I answer a question, I answer in numerical form. That's the only way I know how to talk. So you saw the numbers I spit out to you. I spend a good part of my day analyzing the market. I literally do all kinds of calculations. When you guys go to my website after this and you start clicking on the buttons and you get on my landing page and you look at all the numbers I have there, I'm always trying to quantify the asset, because to me, numbers speak volumes, right? So if I didn't know how scarce the number of assets were and how often they trade and what they trade for and what A-class trades for and what 1970s trades for, what the gross rent multiples were, what typical cash on cash returns are, what the differential is between a cap rate and a borrowing rate is before you have positive leverage. If I didn't know all this stuff, right, I would have quit a long time ago. I would have gotten frustrated. But knowing your market like the back of your hand and being able to spit that out to people impresses people, and they know what you're doing. They know what you're dealing with.
Awesome. Final question: if you had to do it all over again starting tomorrow, what from scratch, knowing what you know now, what would you do differently?
That's a great question. What would I do differently? I would have probably jumped into a CRM a lot earlier. I think the first 6 or 7 years of my career, I just, kind of like anybody else, I used Outlook or I used spreadsheets to keep contact information and load properties. And it just wasn't organized. It wasn't until I mastered a CRM system that I was able to do that. So all the stats that I do, every property that exists in the market is in my database. Everything over 10 units, literally all 1,959 assets are in my database that are categorized by every metric you can think of: number of units, bedrooms, age, type of roof, construction, who owns it, what they paid for it, all kinds, market rates, student housing, whatever it is. Every single metric is within a searchable field. So for instance, if Pat called me up and said, Beau, great job together. We sold this asset. Now I need to 1031 the money. I'll work with a 1031 guy that chose me to sell his asset. So what I can do now is I can go into my database, and if Pat says, Beau, I want to buy deals that are between 100 and 200 units that are student housing only. I only like the Gainesville and Tallahassee markets. It can't be older than 1990. I don't want it newer than 2015. If it's sold in the last 2 years, I probably don't want to buy it because it's probably already been value added. Don't find me any deals that just got refinanced in the last year. Don't find me anything that's owned in a long-term fund. I literally am able to query down 1,959 assets to the only and exact 64 assets that he could buy. And I can make 64 phone calls in a week, right? So the CRM was the game changer. That was, I brought that in like 2005 or 6, somewhere in there. And my game has gone berserk. And if I were an investor, if I was someone who invested in apartments like you guys, the guys who are data driven using CRMs, you have a special advantage over everybody else. I'm telling you, it's amazing. Every day I walk in and I open up my CRM on my to-do list, it's telling me things to do today that I input in last week, last month, 10 years ago. When I had a conversation with Erickson, I called up Erickson and I said, Erickson, hey, my name is Beau Beery. I love your property. I'd love to sell it. Oh, hey, Beau, listen, this is owned in a long-term fund. That loan comes up in 2024. Call me around then. We'd love to talk to you. So what did I do? I put in for 2022, 2 years ahead of time, or 2021 to start calling him. So when I come into my CRM for you guys, you think about all the conversations you have with brokers, investors, lenders, all these things you're learning, you're inputting them into your system. So when I walk in, I open up my to-do list, I'm reading properties that I know whose mortgages are coming up next year. I'm reading when the long-term fund expires. I'm reading, I even do calculations on what the average sell time is of different types of assets and different types of owners. Like, for instance, the overall holding period of every deal that closes right now is 41 months, right? So I know of a certain type of asset, type of seller, as soon as they buy that, I'm already inputting into my system to call them around month 24, because I know in about 20 or 17 more months, they're going to sell. So I'm already starting to stroke them. And I know when their loan ends, I know who their investment partners are. I know what their constraints are. All these things, I'm always inputting dates into the future because I'm trying to create an algorithm, or I have an algorithm that I've created that tells me when an asset's going to sell, oftentimes before the seller even knows it. And it's because I track big data, right? So if you know the law of big data, if you have enough data points, you can start to formulate stories from it. You can start to formulate dates and events in the future that are going to happen as a result of that data. And the only way you can do that is through CRMs.
Awesome. Well, that's all the questions that I do have. So guys, I just want to throw this out again. Beau's book is Multifamily Investors Who Dominate. It is on Amazon. It is an actually great read. I would not promote anything on this platform that I personally have not read myself. I'm an audiobook guy, so I knocked it out in 5 hours driving around New York City. Very informative. If you're looking to become what Beau describes as an elite investor and not an average investor, go ahead and pick up the book, learn more about it, and learn how to position yourself in front of the brokers and how to dominate. With that said, Beau, where can people learn more about you and connect with you if they needed to?
Yeah, you bet, man. Thank you for that. Appreciate that. Let me share the screen here. Besides my website I went over, this YouTube channel right here, it's called Beau Knows Multifamily. There's really solid stuff on here. I don't do fluffy stuff. I don't do like, should you sell or not? All of this stuff, beside this stupid video here, I actually took a property manager in my car over the weekend, and he was, it was really fun. It was a property I sold And this was the maintenance manager, and he loves Porsches. And so anyway, beside that one video, all these videos here, this is why multifamily inventory analytics is crucial. How to win competitive bids. You want more real estate deals, be a closer. To all these different videos I have on here. I have a playlist for buyers. So all these are all videos for buyers. These are listings that I've done in the future, in the past. Sometimes I'll post new listings on there that no one even knows about. Sometimes I don't even call my favorite guys. I'll just, for fun, I'll just post a listing on here. This playlist is for sellers. This is how to do analytics, like I talk about, how to do it like a boss. If you're a beginner, you got to watch this whole playlist. This is good shit right here. And here's just various podcasts I've been on. This is for brokers, but anyway, once a week I post a video. So you come on here, just subscribe, and then you hit the notification bell. And that way every week you'll automatically get an email from me that the video is up there. But this is all like, these are really solid action-packed videos that are from experience, that oftentimes they're just kind of like something happens during a transaction. I'm like, oh, I got to do a video on this. Like, I can't believe this happened, or I got to educate people on this. So this is a good one. I would subscribe to that.
Awesome. So without further ado, guys, Beau, I definitely want to thank you again for spending about 2 hours with us. I'm pretty sure everyone has learned something very important and intriguing here. I know for sure I have learned a lot, and I'm definitely going to rewatch this again. Thank you for jumping on. And for you guys who are looking to catch the replay, this will be posted up on my YouTube, on the Meetups YouTube page. I dropped the link in the chat. I will drop it on there again. It will definitely be there by tomorrow morning or tomorrow afternoon. But again, Beau, thank you so much for dropping.
Oh man, thank you. I appreciate your time and putting me in front of this great audience. I always love doing this. And if anyone want to call me separately, just go to my website. My email's on there. Shoot me an email of some times you have available over the next couple of weeks. And always happy to grow investors. For me, it's super important. There's not a lot of brokers that will work with newer investors because, a lot of these guys are working on much bigger transactions. For me, I'm 45 years old. I'm going to be doing this 20, 25 more years. I like to grow investors because if I can grow you and help you build your business, you're going to be loyal to me for a long time. And I want to do more business with you guys.
Awesome. So let me just stop this recording and we'll